Good morning, everybody. This is Dennis Wilborn from the Active Trend Traders. Joining me today is David Grandy from All About Trends. Good morning, David.
Good morning, Dennis.
It's an absolutely fabulous Indian summer out here in California. It was about 92 yesterday. So did you get outside and enjoy the wonderful weather?
I have been, and this is my favorite time of the year. August through October is the best weather, and it's a great place to enjoy it. There's so many things to do here.
And I know Harlan is busy because he's up in like Minnesota, right?
Wisconsin.
Wisconsin. So I know he's like changing the oil on his snowmobiles and all that kind of stuff. And one of his sons actually drives a snowmobile competitively, and he posts some really awesome pictures of that his son on Facebook, which is really, really fabulous. And so let's get going. That's one of the things, both for David, myself, Harlan, we all have a presence on Facebook, and so if you want to join us there and just chat with us, that's cool too, but that's just one more way to get a hold of us. I want to remind everybody that today all materials that are presented are for training purposes only, and that traders should always paper trade any new method prior to risk of personal capital. The market's been doing some wonderful things over the last week or so, but I want to remind everybody that David and I will be on October 7th. What day is October 7th, David?
I think that's a Tuesday.
Tuesday. We will be presenting to the Bay Area Stocks, Options, and ETF Investors Meetup at Englander Sports Pub. And here's the website where you can go and sign up for that. It's there's no charge for the meeting, but they do ask for you to grab a bite to eat at Englander. And we ate there about a month and a half ago, and it was pretty good stuff. And the organizer is Bobby Sharman. And oops, sorry, Bobby. And so we'd like to see you guys there. And just a reminder that we all like to talk about stocks, and so if you do have any questions or whatever, emails, give us a phone call, and our numbers will be listed at the last slide. And we also like to do presentations. David, I'll be doing a presentation probably about chart patterns in Oahu, in Hawaii, not next week, but the week after on a Thursday evening. So if anybody knows anybody who's in Hawaii who you think they could, do well with the art of trend trading, please let them know so they can plug in with us, because Hawaii is kind of my second home. I lived there for almost 13 plus years. With the market going through what it's going through, I found this, somebody sent me this little cartoon here, and for us who invest in the market, us who trade the market, it's always a good thing to remind ourselves it's not about instantaneous gratification, and you got to love this. Oftentimes our society in general is just kind of like into this instantaneous gratification thing. They don't want to put in the amount of work it requires to become a master trader, and so I thought this was kind of cute. Annual instant gratification 0-mile fun run. Runners to your mark, get set, go. Okay, go pick up your T-shirts. But we're not like that one as traders, and when we try to be, it gets us into a lot of trouble. For today, the market is in correction, and so the question that I walk in with this week is that is this relief rally that we're currently experiencing? Will it be a total relief rally and go into the end of the year relief rally, or is it just a sucker rally for right now, and we'll get one more at least test of the lows before we make the nice bounce into the end of the year? Some of the outside influences that we're getting, of course, world economies, getting a lot of interesting news out of China, out of Europe, There will be no more QE, and of course we have the terrorist thing going on. Right now the S&P is looking really good. We're bouncing, but it's still holding below the 50-day moving average. The NASDAQ 100 is living within the expanded top that we highlighted to everybody last week. And the Russell held that lower support zone. It briefly breached it yesterday but came bounding back up through it. And so clearly if somebody is trading the ETFs, the TNA, the TQQ, UPRO, or the like, there are great either short-term trades, and because some of those things move $3, $4, $5 a day, and so there are profits to be made in those. I'm waiting for a little bit more significant of a signal to get into some long positions there. Last week we highlighted the market was in chaos and disorder, and sure enough, IBD put the market into correction. But I find it really interesting, David, that the market went into correction, as so oftentimes happen. The characterization by IBD says market's in correction, and then immediately we get a bounce. Where what we've been talking about for almost the last 3 weeks is just to be careful, and I know that we really haven't had a lot to trade in, so we were literally almost flat the market for that time period, right?
Right.
Okay, so here's one of the indicators that I put up every week, and it's percentage of stocks in the NYSE that are above its 20-day moving average. This week we hit a new low for the year, and actually a newer low. It actually got down here below 13, or almost 10%. During the bear market of 2008, this indicator actually got down to about less than 3% of the stocks on the NYSE were above its 20-day moving average, which was showing the significance and severity of that bear market. What are we going to get now? We still have not rebounded past the 25% level, which is usually a pretty good trigger if we're getting some basing and we get the proper signals to bounce up. That, as soon as we get broken back above that, we can anticipate a push higher. And so let's take a look at the charts real quick. There we go. We get over here to the SPX. Just get over here. There we go. SPX. If the price action, I'm looking at the daily chart on the left-hand side, weekly chart on the right-hand side. If we close right here, folks, the daily chart is putting in what's called a morning star pattern, which is a bullish reversal signal. At the same time, we have an intermediate trend reversal going on, but where are we going to go? We do have some overhead resistance both at the 50, at the 20 pointing down, and of course back up here at the 1991 level, and also the 1980 level, which is right there, where these past lows were. So if we, it can actually spring up and go above it, as we did over here, or we could just go into a holding pattern right here at the 8-day moving average, and it may put the indices may put in a pattern that looks kind of like this, where it just kind of held right there at the 8-day, and then it rebounded. Differences between here and this rebound and here, let me get rid of that, is that here, as you'll see, the 50-day moving average had not completely tipped back over. It was still meandering up. Here we actually have the 50-day has changed its trajectory and its slope to be facing down. Oftentimes what that is a indicator of is that we'll get to that and then rebound back down from it. because the slope of the 50 has now changed to a downward trajectory, even though its speed is only slight. I'm also looking over here at the weekly charts. We've got stochastic starting to pull down. We've got a little bit, still not a lot of momentum coming back into the market. So that's what we're kind of looking at right now. Yes, we could continue to rally up here, but I always like, since we've made a new low, I like when it comes up and retests, pulls back, stops short of these lows back here, and then rebounds from there. And it's this point that I'm looking at for a potential entry into some of the index ETF, the leveraged ETFs. NASDAQ showing similar type process. Let's see, there we go. Same thing, a Morningstar-like signal here, which again is a bullish signal. We are working within this expanding top, and clearly the NASDAQ is stronger than the either, well, the S&P and or the Russell. We've got the true strength indicator starting to turn back up, hasn't made a hard run, and we've got momentum starting to come back up also. Our question is, what's going to happen if we have a level of resistance here? What's going to happen when we get up here? Will the bad news that's currently out there cause sellers to come back in? Then we'll know whether or not this is a good relief rally that rolls us in, and actually we're moving back into a longer term up, the uptrend will be continuing, or if it's a sucker's rally. Lastly, the Russell. Basically, and again, I'm watching this to see how it's reacting when it gets back up to previous levels of support, to see how strong of a level of resistance that becomes. And with the Russell, what you've seen is we came down, it stuck its nose, it kind of did a Pinocchio, if you will. Its nose grew a lot below the lower support level, but then rebounded up yesterday, and we actually ended with what's called a piercing line in yesterday's action on the candlesticks, which is a bullish reversal signal. And then we gap up today and bam, run into the top, the ceiling that's at about 1107, and it's holding right there. And so let's see if it can gain some more momentum, see if this momentum continues to come up. And if we're going back into a stronger momentum uptrend, because look over here on the weekly chart, is we came right down to the bottom of this channel, and we've got one, two, more or less a double top, not quite reaching the same height. But the bottom, the lower portion, the floor, has remained in place, and so we'll be looking for that for a additional positive reversal. If we close where we are, this is a hammer-like on the weekly charts. This is a hammer-like candle, and the other two indices also are putting in hammers. Again, if we close where we are right now, they're putting in hammers on a weekly chart, which is a bullish indication that we may be going back into at least a little bit more of back into a short-term uptrend, which may grow into something better. But David, that's what I'm seeing from the charts on the S&P, NASDAQ, and Russell. And I think this kind of goes right in line with what we've been talking about. What you've been talking about is getting this bounce off this level. And so let's see what happens from here. Are you ready to go?
I'm ready to rock and roll.
Okay.
Yeah, yesterday was an interesting day. I took my daughters to school in the morning, and by the time I had done that and gone into the office, the NASDAQ was already down 55 points, and there's a couple of traders that sit across from me that are just, what's going on? And, I'm just the first thing I did was I didn't really worry so much about the indexes. I just started looking at what leading stocks were doing, and as I was scrolling through them on my iPhone, I was like, this really just has more of a capitulation type feel to it to me, because I'm not really seeing a lot of damage here in leading stocks. And sure enough, it wasn't long after that till the market did this very nice positive reversal yesterday, and away we went. And that's really what we try to pay attention to. It's because it's a market of stocks. It's not necessarily a stock market. I mean, we definitely do pay attention to the indexes, as I'm going to show you in a second. But it's really about leading stocks. And the other thing that we do that really helps when we have weeks like we've had is trade size risk management. So if a trade goes against us, it's a lot easier to handle the emotions of, oh gee, I'm losing money in this position, and it's breaking support, or both, than it is if we're going to go out and put 20% of our portfolio in a position, or be fully invested 100%, or even worse, being on margin. Very rarely in the 6-year history of our newsletter have we been more than 50% invested, and we only do 5 to 7% of our portfolio in any one position. And while that may sound a little bit conservative, and at times where the market's making new highs, it does seem like we're a little bit underinvested. But we do that because of weeks like this, where it's all about protecting your capital and managing your risk. And when you have appropriate position sizing, it's really easy to handle the emotions of being down in positions and to say, hey, you know what, we know we're short-term way oversold here. And at some point where there is going to be a balance, and this is going to be an opportunity for us to either walk away at break even, or very small losses, or even gains. And because we have the appropriate position sizing, we can wait a day or two and wait for that bounce, versus selling into fear and letting our emotions take over and getting stopped out and taking losses, and then even worse, having the market turn around and go up without us because we stopped out based on emotions. So that's what we really try to teach here, is taking the emotions out of it and just doing what the charts do, and practicing appropriate risk management with your trades, trade size. So as we get into this week's presentation, it is all about trends, as in trend channels. And here's the indexes. I mean, it's definitely been wild and woolly, no question about it. It has been a difficult environment, but when you just step back and look at the overall big picture, we've been here before. We were down here before, we're down here before, and then here we are. All we did was we're just trading an overall trend channel, and we bounced near support. Same thing on the S&P. We've definitely been here before, and your weekly charts that you just showed, Dennis, had the same thing. You can see the trend channel there very clearly. So, big picture, that's all we did. Was we hit support and we got a lift from it, and where it'll go from here, we don't know. We'll just keep doing what the charts tell us to do. Right now, we're holding with our positions. We definitely have some good long side opportunities presenting themselves. We also have some short sales setups, and we're just going to trade what we see. So, and that is our trading plan. We don't chase stocks. We let them come to us. We buy support. We sell resistance. We short resistance and cover at support. And the last thing we wanted to do yesterday was stop out, when the markets are so deeply oversold, and at a trend channel support zone. So we're just trading what we see and trying to ignore what we think are here, and definitely don't want to be trading based on fear. So the 3 things you need to know in the market, it's simple chart patterns: uptrends, downtrend patterns, and change in trend patterns. And I'm going to talk about a couple different uptrend patterns. Trend channels, I just showed you how we use trend channels with the indexes, but the same thing happens with stocks. We're looking for stocks that are in confirmed uptrends, that are pulling back, ideally in an orderly manner, to trend channel support. There's clear support, there's clear resistance. This is Avago, or Avago, I'm not sure how it's pronounced, but Avgo, we'll just call it that. And it's a, you can see the stock's been in a nice uptrend for quite some time, and here we are pulling back. It got a little wild there with the indexes. Again, yesterday just really had that capitulation feel to it, and this went down with it. But it's still pulling back here within the overall uptrend channel, and you've got multiple levels of support. You have a lateral support at the blue line, the 50-day moving average, and trend channel support. And you're very short-term oversold here. So all the things that we look for are here. We'd love to see this just pull back a little bit more, come back down to this blue line, and then we'll definitely be taking a look at that trade for sure. The other pattern that we use a lot in uptrends are right side of the cup crossovers. That's what we call them. So for us, we don't like to go buy breakouts because by the time a stock's broken out, it's usually well away from support of any kind, and we're just chasing a stock as it's making new highs. And that usually most stocks, when they break out, will pull back and give you an opportunity to buy at support, and that's where we prefer to buy things. And the same thing happens when a stock's forming a base. It usually forms a cup base, so you have the left side of the cup as it's making its way down. You have the bottom of the cup as it's consolidating near the lows and finding support. And then you have the right side of the cup, and the right side is formed when a stock clears a resistance level within the base. So this is EPAM, and you can see we've got a really nice looking cup here, left side, the bottom here, and then last week it cleared the resistance here at the bottom of the base, and it's starting to build the right side. But in so doing, it's pulling back to an area that was once resistance should be now support. And so we're just going to be patient, wait for it to pull back here. You can see it's short-term bought, so when it completes its pullback, this will improve. This will be more towards the oversold indicator, and that's what we're just waiting for. So the indexes have had a nice 2-day rally here. As you pointed out, they're still below the 50-day moving average. It would not be unreasonable to see some digestion of that gain, and should we see that, this will help EPAM pull back, it'll help AVGO pull back further and create good setups for us. So now, downtrends. It is a market of stocks. It's not uncommon for us to be short at the same time that we're long, because again, we're just looking for patterns and doing what the charts tell us to do. So pullback off lows is probably the best short sell pattern out there. We're looking for stocks that have formed some sort of topping pattern. Usually it's a double top. Then they break support, like the 50-day moving average, and then they'll put everyone's like, oh wow, this stock is cheap, I can get in now. So it forms like a snapback rally. It rallies back up to a resistance level that used to be support, like the 50-day moving average used to be support. Now it's going to act as resistance. And here's UHS, Universal Health Services, and you can see it was in an uptrend for quite some time. It formed a double top. It crashed through support, the trend channel support and the 50-day moving average, and now it's trying to rally back up where it will likely find resistance at the 50-day moving average, and that's what we'd like to see. It continue to rally here, go up to the 50-day moving average, and then get turned away and make a move to the downside, and that's where we would initiate our short sell. So, and there's plenty of other stocks that have broken support with the recent sell-off here in the indexes. So we've got all kinds of short sell patterns that are setting up. I mean, like, they still need some more chart time, as we like to say. We just need a few more days for the patterns to complete themselves. But if you like trading in general, whether it's long or short, this is the time to get on board with us, because we've got lots of good setups on both sides of the fence, and it's just a matter of trading what we see. So that's what we're doing. We're just going to continue to trade within the overall trend on the indexes. It's a market of stocks. It's okay to be long and short at the same time. And all we're doing is looking for chart patterns and doing what the charts tell us to do. So like I said, this is a really great time to get on board here, and I don't know how to make it any easier but than offer a free trial. So you get nothing, or you get everything our subscribers get for free for 15 days. There is nothing to do other than just go to our website and put in your email address, and we'll send it to you. There is no need for a credit card or anything. It's just tell us where you want the newsletter sent for free for 15 days, and you can see everything that our subscribers are getting, and learn more about these patterns and see how we do it. And I think that's about all I have, Dennis.
Okay, David, I had to take myself off mute, and and all that kind of stuff, and get ready to talk again. And so awesome. The thing that I want to remind everybody is that both Harlan, David, myself, we all look for pullbacks to be getting into positions, and oftentimes those pullbacks, if you're not used to trading that way, it's an uncomfortable time to be jumping back into a position, but it actually turns out that it's one of the best risk-reward type places to get in, because it puts you so much closer to a stop loss. And typically, we average our stop losses, David, when they are hit, they hit about 2.5% maybe, or less, unless we make a strategic decision to let it go to 7%. But I would say 99% of all, when we are stopped out, it's like for just a small amount, very small amount. And
right, and the overall when you couple that with position sizing, like 5 to 7%, the overall impact to the portfolio is negligent.
Yeah,
it's usually less than 1% or maybe 1%. So it's really hard to get too emotional about that, because you know that you're doing the right thing, and it's just a matter of the market and the stocks playing ball.
Yeah, excellent. So just want to remind everybody that the active trend trading system, we basically provide webinars for our members on Wednesday nights for helping people learn how to use the system, and also covering some other important things like this past week we covered how to set up a strategic routine for your trading, and how to make it fit into the amount of time you have available to trade without killing yourself and thinking, oh man, I got to be trading everything in the world, but how to size your trading strategies to the available time you have. And we show people what to trade, when to enter, when to exit, what strategies to use, and what to expect. We are very excited about, and basically from 1 June when we started our timing service through 30 September, here are the income generating trades that have been closed. So we've done about $13,000, almost $14,000 in profits taken off the table since the 1st of June. That's on a $100,000 account. Currently we're invested at 18%. Our profits for September totaled up at $5,300, and our margin accounts were up 27. Our IRA were up 44%, with that number of winning trades in each. Our objective and goal for each year is 60% winners and yearly return of 40%. The reason there is a discrepancy or difference between the margin account and the IRA account is, before we started the timing service, I was using this margin account to be testing out various systems, but as soon as we hit June 1st, it was switched over totally to to trade the active trend trading system. And on June 1st, it was sitting up about 10%, and so we put in about 17% since June 1st. Then, hold on a second, let me get rid of that. Here's just a little overview of our subscription and what is entailed. I'll leave that up so it'll be recorded for the system. But also, like you said, David, the value of the subscription, to even try it out for a month, is $49.99, and there's about $300 worth of value in that, with all the recordings, all the training, all the alerts that come out. You guys send out great alerts. And then one of the things that we are, these are the things we're working on, active trading system refinements for longer term, with traders with a longer term horizon. Power ETF alerts and strategies. I am so excited, David, about one in particular thing. I have I did that report on power ETFs that made over 100% return if traded the proper way for 5 years in a row. Remember that report?
Mm-hmm.
Okay. Well, guess what? The added to each one of those now is weekly options, which there are some ways we trade those that we're going to be implementing those into some of the alerts and all that kind of stuff that we send out to the select members who want the information about options. And then we're going to be training courses for beginners and for and also mentoring prior to the end of the year. So I want to remind everybody, have a great weekend. But before I go, I almost forgot. I am going to go to Mark. Where'd you go? Mark, you're still there. Good. Mark, can you hear me? Hi, Mark.
Yes, I can hear you.
Awesome.
Hi.
So, Mark, I just wanted to come to you on behalf of both Harlan and David, and just to give you a couple of minutes just to share, kind of like your trading journey and what you're finding in the subscription service and being a member of those subscription services have meant for you and what you take away from that.
Okay, good. I found David and Harlan about 3, maybe 4 years ago. I can't remember exactly. Is whenever David wrote an article on Apple, something to the effect of, did you take a bite out of Apple, or did Apple take a bite out of you? So whenever that was. And at that time, I was a frustrated Investors Business Daily guy who'd been working through their system for about 3 years with not very good results. I always seemed to get hammered after the breakout and getting stopped out on the 7-8% rule. And just found trading that way extremely frustrating, and then I found David's article. So I joined their service, and it took me a good couple of years to get my head straightened around to reconcile their system opposed to the IBD habits which I had developed. And the one thing that kept getting in my way is it can't be this simple. The pullback off highs, the whole trend system that David and Harlan had put out there, it worked, but it was counterintuitive to what I had learned in the past, and I had a hard time letting go of the past and trusting what they were laying out. So it took me some time to really get my feet rooted in what they were talking about and being able to stand firmly in it. And about the last year or so, it really started to take root in me. And the biggest obstacle I had to overcome was myself. And David and Harlan feed it into you every day about managing your emotions and basically sticking with the system, watching the charts, picking the better stocks, and going with it. And once I was able to trust myself and trust the system, my results have been remarkable. And I got hammered a little bit like everybody else did in April. I panicked a little bit more than I should have. I've closed the gap considerably. I'm still down on the year about 4% going into today. But from where I was and where I came from, that is a big win. And I have no doubt in my mind that the system is rooted enough in me that I can positively navigate now in both directions. And I rely heavily on the All About Trends system, the newsletter. I read it twice every day. When I get it in the morning, I'll then review it again later in the afternoon, and periodically I'll pick up the phone or send an email to David and Harlan to ask for some clarification, and they're always terrific in getting back to you and offering some tutoring help. So that's basically been my experience. That's where I'm at today, and I hope I answered your question.
Well, I think you did. David, do you have any questions for Mark? I mean, he did a great job.
Mark, that's really great, and that's why we do what we do, is because we want to help people be successful. And when we hear stories like that, I mean, that's the holy grail for us. That makes our whole month, makes our whole year, and really glad to hear it. And congratulations.
Awesome, Mark. Thank you for being willing to share.
Yeah, thank you.
Okay. You know, David, you hit on it really, because some of the emails I get from some of our members, the active trend trading members, voicing some very similar stuff, saying it can't be that easy. But the fact of the matter is it is. I mean, you basically, if you apply your system or the active trend trading system, it helps a person develop patience to be able to move forward. So anyway.
Yeah, I get that a lot when I do presentations or out at trading groups or whatever, and it's like, that's it? There's got to be something else, and it's like, no. I mean, if you want me to make it harder, I'm the wrong guy. I'm
Yeah.
Sorry, I can't help you if you want to do things hard. I mean, we try to make it easy here, and but I understand that it does take some time to get through that and to get that into your head that it's really just about the charts and knowing the patterns and doing what the patterns tell you to do.
Without a doubt. I'm going to take Harlan off. I'm going to unmute Harlan just because we're going to close up this portion and go into chart review. But Harlan, you got anything to say there, my friend?
Yeah, I'm here. I got to agree with you. I think the thing that Mark said that really, yesterday when we were talking on the phone, the thing that really stood out is he mentioned unlearning a style.
Yeah.
It's so hard. It is. It's so hard when it's so ingrained in your subconscious. You're just programmed to look at things a certain way. It's hard to unlearn that because it's like trying to teach an old dog new tricks. Something along those lines.
Right on.
But we're not. We all cut our teeth on Investors Business Daily, and we like it, we love it. But all we did is really try and tweak it. We got tired of getting stopped out. Buying it on a breakout after it's expelled a lot of short-term energy, getting there to the breakout, and so we just would rather sit back and let them come to us, and that's pretty much we use a technical event versus that standard 8%. Everything we do is not based on a percentage because we use trade size risk management, so it's already built in. You don't have to think about that.
Yeah.
Right. It's all based on a technical event. Is it breaking down? Is it truly breaking down? What is the overall trend of it? And that's where the trend channels just save you so many times. It just really, for us, we'd rather operate on what things are bigger picture really looking like. But here's the biggest thing. I had a very hard time unlearning just buying breakouts and looking, and here's the key, looking at a chart. I was so conditioned to look at a chart from just straight left to the right and not looking at it multi-dimensional, like from the lower left to the upper right. So that's a big difference. I see this all the time. People get locked into just looking at things in one frequency, and that is, I'm just going to look at a chart from left to right.
Right.
There's more to it than that, as you've seen, in the slides that Dennis shows and the slides that David shows. It's really about, I guess the best way I can sum it up is your mind is like a parachute. It only functions when fully open. And that's really the truth. You have to have an open mind. You have to be willing to step out of your comfort zone because that's where life really begins.
Yeah.
So.
I agree.
Let's go ahead.
Thank you, Harlan. Hey guys, we are going to wrap up this section of the show. Basically, David and I both want to, and Harlan want to wish everybody have a really great weekend. If you are Bay Area Moneymaker members, we do have the BAM meeting on Saturday coming up this weekend, 9 o'clock over at the Masonic Temple in San Jose. David, you got anything else to say goodbye with?
No, that's it. I think that was a pretty good good webinar there, and I'm looking forward to hearing questions and comments and looking at some stocks.
Yeah, and I want to encourage everybody to come out if you're in that's going to be in San Leandro, right? That we're doing.
Yes.
If you're up in the San Jose, San Leandro, Fremont type area and all that kind of stuff, please come in and see us. And because we're going to be talking about the art of trend trading, because there both is a science and an art to it. And the thing I want to confirm to everybody, both Harlan, David, myself, all utilize time-tested, traditional technical analysis techniques that go back into the, well, gosh, early 1900s when they were first kind of observed. We use those, and that's one of the major differences. Yes, we trade the powerful IBD stocks. However, we know that there's traditional technical analysis that provides what we believe are simpler ways to trade stocks.